So I came up with a list of 6 things that I've called the priceless trading tips. So pay attention, guys. It's priceless, like truly priceless. Most of your mentors, gurus, they don't mention these things. So this is what you need to know. Number one, once again, is proper risk management. So um, what does proper risk management truly mean? And for me, it means a constant, sorry, a consistent amount or percentage that you risk per trade. And the golden tip here is trade only a maximum of 2 different pairs or indices at a time. That's the only way your risk management um, will make any applicable sense. So what I mean by this here is that risk management basically is having a certain exact percentage. You need to know yourself enough to say, if I trade and I risk 1%, I am able to handle that loss emotionally and rationally. I won't get messy, and and that won't affect my next trade after losing that 1%. If risking 2% allows you to trade in the same manner without losing it, and you remain focused, some people take more risk, and that 2% is like the maximum. That you can't go above 2% if you want to be consistently profitable, and you don't want to get into all that emotional turmoil and getting psychologically messed up as you trade. So risk management simply means what percentage, as you practice, be it on a demo account, um, what have you found to work for you in a way that you remain focused and don't lose it, as a percentage that you're willing to lose from your account as a whole with every trade that you take. Risk management also has to do with risk to reward. Never take a trade that will not give you at least double what you're risking. If you risk $10 on a trade, know for sure that you can only enter a trade that will give you at least a minimum of $20 profit should it hit your 1 to 2 risk to reward target. The reason as to why this is very important to consider is because, one, it will keep you out of bad trades. Because remember, you cannot enter a trade, place a buy or a sell, if you don't know where your take profit is. And if your take profit shows you that it's less than a 1 to 2 risk reward, that trade is not worth getting into. So one, using this risk reward and the ratio of 1 to 2 will keep you out of bad trades. And two, if you have a risk to reward of 1 to 2 minimum, it means even if you only have 4 profitable trades out of 10, you will still make 8%, and you lose 6%, and that keeps you at a 2% profit by the end of the day. So you only need a strategy that gives you 4 to 6 or 40% profitability in order for you to be a successful trader, if you use proper risk to reward and proper risk management of a minimum of 1 to 2 risk to reward ratio. And that means with those trades that will go on to 1 to 3, 1 to 4, 1 to 5, sometimes you hold for a few days and it will go all the way to 8, 1:8 risk to reward ratio. And those will be home runs. Those will be the great, the perfect trades that push your account further. But minimum risk to reward should be at 1 to 2, and your risk management should be, my recommendation is risking only 1% of your account. So you see, This is something that was very disturbing for me to hear from professional traders as I was learning how to trade, because every time I got to watch a video on YouTube from someone who has been in the game for a while and they talk about risk 1%, risk no more than 2%, I used to get put off by that. Literally, I usually did not even go on watching that video because it was against what I had in mind. I was looking for a home. I was looking for that holy grail. I was looking for the one trade that is going to take me from $10 to $100. That one trade that's going to get me from $100 to $1,000. That one trade that will get me from $1,000 to 10,000, 10,000 to $100,000. That was my plan. I literally had this, drafted. Like I must start with the 100. From 100, I'll get that one trade and make 1,000. From 1,000, I'll be at 10,000. And then 100,000. And in a few months, I'll be a millionaire. Well, guess what? I ended up blowing my accounts, failing to pay rent, failing to buy food, failing to do anything, and I had to move back in with my parents because of that idea. You know, so the mistake that most beginner traders make is not to take the advice from those that have been in the game for a while. If you can avoid learning the hard way in Forex and just listening to what people have to say, those who have been doing this for way longer than you can avoid a lot of damage, you can avoid a lot of losses, and you can keep your sanity for sure. Forex trading is a very painful game, a very lonely game. You can imagine just being on your computer or your phone for hours every single day and people around you wondering what it is that you're doing because they're not seeing any um, progress, really. The other mistake that people make when they start trading Forex is letting the whole world know that they're about to be rich, showing people your winners when you do win. Well, guess what? I give you one condition. If you are going to show people your winners, promise me that you will show them your losers as well. And let's see how that goes. Okay, enough emphasis on that point. So we'll go to our second point, which is perfect your entries. Your mentor probably did not tell you this, but the secret to entries lies in the smaller time frames and your ability to transition from higher to lower time frames. Top-down analysis is key. So here, I need you to understand one thing. I need you to know that you cannot become successful, you cannot succeed in Forex if you do not consider the importance of the top-down analysis. And if you're trying to scalp as a new trader, basically, if you're trying to scalp as a new trader, the same thing I mentioned about this guy telling us on the 1 minute time frame, trading boom and crash indices, for those of you who know what spikes can do to you. And this guy says if it goes above 70, it's time for you to sell. It has overbought. If it goes below 20, 30, it's time for you to buy because the market has oversold. Now, can you imagine months and months later of losses, figuring out, wait, years later, actually, when I got to know about, I trade the Falcon strategy, so I trade patterns, technical analysis, full-time technical analysis, chart patterns. So you can imagine me figuring out and looking at the 4 hour time frame, not even the 4 hour time frame, like the daily, or looking at a chart on the weekly, and there is a pattern forming on the weekly time frame, a pattern that has been forming for the past 2 years. And this is when this pattern is giving me signals of a break of structure in the next few weeks. But I was busy a few years ago looking at the same chart pattern, not understanding anything that's going on the weekly time frame and why the market is moving in the manner that it is moving. And I would be on the 1 minute time frame, selling every time it goes above 70 on the RSI and buying every time it went below 30. Imagine, and this is where most of you guys might be if this is when you're starting out. You have no idea how to trade, and the very first thing, the easiest thing there is to trading Forex that you're going to find and try to identify yourself with is, what do you call them? Indicators. Before you learn how to trade Forex, before you have a strategy, forget about the use of indicators. Indicators are used as confluence. Oh, okay. So here is a head and shoulder pattern. I'll be selling at this point. What's the other confluence? There'll be news in a few hours. So I know the news is most likely going to push the market in the correct direction according to my technical analysis. That's confluence one. Next confluence, I have say one of the moving averages. I have a simple moving average, or I have an exponential moving average that says if it crosses over and blah blah blah, I'm going to get into that trade. Confluence number 3 is when that happens and the moving average crosses over and does whatever it is that it does for you to follow whatever it is that you learned from whichever guru or mentor who posted a video about I use this indicator to make money. So forget about indicators, learn the skill, get into the craft of trading, and find your edge find your edge on the markets, and that's the only way. Time, patience is the only way you're going to become a profitable trader. Anything apart from that, false. If you're not willing to put in the kind of effort that somebody puts into being in uni or college, Forex is not for you. If you do not have passion, if you do not develop passion for Forex trading, you won't make it. 5% in the whole world make it. You know who fails? Doctors, lawyers, engineers. All these people fail. You know who usually makes it in Forex? Athletes. People who understand discipline, people who understand long-term goals, and people who understand I have to go and train every day regardless of how I feel. People who don't get moved by their emotions, and if they feel bad, they're not trading that day or practicing, you have to have discipline. And exactly that leads me into